Is Palantir on its way to hitting $100? Here's why this tech giant might be on the verge of something huge. Let me put this into perspective for you. Just this December alone, Palantir has already surged around 14%. But what's truly incredible is since hitting rock bottom at around $6 in December 2022, this stock has skyrocketed by a staggering 1,200%, now trading at around $76. Think about that for a second. If you'd invested just $1,000 when it was at its lowest, you'd be sitting on over $12,000 today. But that's if you were lucky enough to time the bottom, which is near impossible. More likely, you have caught the ride somewhere in the middle, which is spot on too. Palantir only had its direct listing in September 2020 at $10. In just over 4 years, it's transformed from a market newcomer into the 85th most valuable company in the world, with a market cap of about $174 billion. Nothing short of remarkable. Before its recent move to the Nasdaq, Palantir was actually the second best performer in the S&P 500 for 2024, right behind Vistra. But what's driving this astronomical rise? How did this relative newcomer end up going toe-to-toe with some of the biggest names in tech? First off, Palantir's revenue growth has been nothing short of explosive. We're talking about a 27% increase in 2024, pushing them to $4.2 billion in revenue. But it's not just about the numbers, it's about where this growth is coming from. They've been absolutely crushing it in the commercial sector, and their data analytics platforms are becoming the go-to solution for businesses worldwide. Palantir have positioned themselves right at the forefront of AI innovation, and Wall Street is taking notice. They've secured major government contracts, including a game-changing partnership with Booz Allen Hamilton for US national defense operations. Unlike many companies that are just slapping on AI labels on their products, Palantir's artificial intelligence platform, or AIP, is genuinely transforming how organizations handle data. They're not just analyzing data, they're helping companies make real-time decisions that impact their bottom line. This isn't your typical tech company. This is a company that's fundamentally changing how businesses operate. Speaking of operations, let's talk about something that often gets overlooked: Palantir's client retention rate. When companies start using Palantir solutions, they tend to stick around and expand their usage. This creates a snowball effect of growing revenue that's incredibly valuable for long-term investors. It's not just about acquiring new clients, it's about growing with existing ones. Now, let me share something really important with you. As someone who's been analyzing stocks for years, I always teach my community to look at the bigger picture. Here's a key detail. Most of that 1,200% climb happened within a 4-year consolidation since the direct listing. Only 70% of the move has happened since breaking out to new highs in November. Think about this. Unlike Nvidia, which has a track record of massive trends, 650% between 2016 and 2018, 1,000% from 2018 to 2021, and now a 1,200% rise since 2022, Palantir is writing its first chapter. This is both exciting and challenging. Why? Because we don't have historical patterns to guide us. When a stock moves this quickly without retesting previous support levels, like the January 2021 high and the crucial $50 mark, there's always a risk of a sharp pullback. It's like stretching a rubber band. The further you stretch it without letting it settle, the stronger the potential snapback. The AI boom has created massive opportunities, but it's also led to some frothy valuations. Palantir's current price to sales ratio might make traditional value investors nervous. However, what many miss is that high growth tech companies often trade at premium valuations during their expansion phase. The key is understanding whether they can grow into these valuations. Looking at the technical aspects, Palantir's chart shows some interesting patterns. The volume profile during the uptrend has been particularly strong, suggesting possible institutional buying rather than just retail FOMO. This is crucial because institutional investors typically have longer holding periods and deeper pockets, which can help stabilize the stock during market turbulence. So what should you do? If you're already holding Palantir, keep holding. The trend is your friend, and right now that trend is pointing straight up. You might even want to consider strategically adding to your position as it hits new highs. But here's the key: be systematic about it. Don't let emotion drive your decisions. For those watching from the sidelines, I know FOMO is kicking in hard right now. Trust me, I get it. But remember this golden rule: never risk more than 2% of your portfolio on any single position. Okay, looking ahead to 2025, Palantir's got some serious catalysts in the pipeline. They're expanding their AI capabilities, forming strategic partnerships with giants like AWS and Anthropic, and analysts are projecting revenue to hit almost $6 billion. That's serious growth potential. In terms of market positioning, Palantir operates in a unique space where they face relatively little direct competition. While companies like Snowflake and Databricks compete in the data analytics space, Palantir's combination of government contracts, commercial solutions, and AI integration creates an ecosystem that's hard to replicate. But of course, there are challenges. Some analysts are raising concerns about the valuation. The company's heavy reliance on government contracts could be a double-edged sword, and competition in the AI space is fierce. There's also the question of whether Palantir can maintain its growth rate as it scales. It's one thing to grow rapidly from a small base, it's another to maintain that growth as you become a larger company. One company that has maintained its stock growth is Apple. They've continued to rise steadily, recently reaching a new record high. This is a stock worth keeping an eye on, so watch this video if you're considering an investment in a company with a long history of consistent upward performance.